Income tax 2020. Tax software example. Adjustments to income. Alimony paid. Come in, relax with income tax 2020. Here we are in the Lacerte tax software. You don't need the Lacerte tax software in order to follow along, although I do think they have a free 30-day trial, so you might want to check that out. If you can get access to it, it could be a good tool to be practicing with if you can get access to the demo version. We will, in essence, be taking a look at the Form 1040 and related Schedule 1, jumping back and forth from the data input to the form to take a look at the effect of different scenarios on it, the tax software making that easier to do. Up top, we have the single filing status. We're going to be starting with Eric Smith, the single filer living in Beverly Hills 90210. We've got the $100,000 at the W-2 income being our starting point. Standard deduction $12,400. That brings us down to the $87,600. If we go on back to our forms in terms of the equation in Excel, there's the income, there's the standard deduction, there's the taxable income. So now we want to think about a situation where we have an alimony situation. We're considering the alimony paid type of situation, remembering with the alimony paid that we have to have this cutoff date in mind. So if we're talking about something, let's read this here one real fast. Beginning January 1st, 2019, alimony or separate maintenance payments are not deductible from the income of the payer spouse or includable in the income of the receiving spouse if made under a divorce or separation agreement executed after December 31st, 2018. So there's your cutoff date, December 31st, 2018. So you're keeping it in your mind with regards to alimony. Okay, there's a cutoff date, December 31st, 2018. If the agreement was made before that, it may well be the case that the person paying the alimony, which we're focusing in on here, will be able to then have the benefit of taking a deduction for it. And the person receiving it is going to have to include it in income. And that means we're going to have to tell the IRS, using the tax return, who that person is, including their social security number, so that we can report it to the IRS. And then if it was an agreement made after the cutoff date, then it's most likely the case that the person paying the alimony will not have to or not be able to record the deduction for the alimony paid, and the person receiving it will then not have to include it in income. And then, of course, there could be modifications for that. So from a practical standpoint, what you're probably going to be seeing is saying, okay, let's look at the prior year tax return, whether we did it or not, and go into Schedule 1. Is there something where there was a deduction for the alimony paid in Schedule 1, for example, like we would have in this tax year, in this tax year software in terms of the tax lines, 18A for the alimony paid? If it was on the prior year returns, it's likely that the divorce agreement was made before the cutoff date, and then if no modification was made, then it would probably be the case that any alimony paid in the current year might be deductible. You're not going to get typically a 1099 for it or anything like that. You're going to have to basically talk to the taxpayer about the alimony arrangement and whatnot, and see whether or not they made alimony payments, and then this is where it would be recorded if that were the case. Now, if nothing was on the prior year tax return, or if you're talking to someone considering a divorce agreement in the future, then you're thinking about the current law, which is basically saying that it would not be a deduction. The alimony wouldn't be a benefit to the payer in the fact that you'd have the deduction and you wouldn't include it in income. So even if there was a divorce in the current time period, you're thinking, okay, alimony might be there, but it's probably after the cutoff date, and therefore not something that's going to have a tax consequence in terms of being deductible or included in income. If it was on the return last year and there was a modification to it in some way, then you got to think, okay, did that modification adjust whether or not it should be included here as a deduction and income? Okay, so that means that on Schedule 1, we're looking down on Schedule 1, and we're in Part 2. Let's say that this is going to be something that's deductible. I'm going to jump on to it. We'll jump on over. And this is how the tax software kind of helps you out to determine what that cutoff date is. So if I enter the alimony, I got to enter the recipient's first name. So I'm going to say Jane, and then Smith, I'll say, and social security number. I'm just making up a name. Obviously, this is the spouse. And then the amount paid, we're going to say just that 1,000 just to make it nice and round number. and then we're going to say the date of the agreement. So here's the thing that's going to help you out to determine whether or not it should be included or not. You say, okay, the divorce agreement happened before the cutoff, before 2018. Let's say 06/15/17, and then this is a non-deductible pre-2019 agreement. I'm going to keep that there, and then we're going to say okay. And then if I go on over to the forms, it would do what you would expect. We include the $1,000 in the alimony paid. It's going to be deducted because we're talking about the payer in this case. And then just like you would expect, just like what a 1099 does and a W-2 does, the IRS says, hey, if you're going to take the deduction, if we're going to allow you the deduction of this because you paid somebody else, then you got to tell us who you paid, give us their social security number so that we can go collect from them. So that's what this is. You give the social security number of the ex-spouse, and then here's the date of the original divorce so that the IRS can go after them for the $1,000 that they got and try to pick it up there. And then we're going to say then on page 1, it obviously flows forward to the adjustment on line 10A, and then that would flow down through to the adjusted gross income, standard deduction 12,004, the 86.6. If we did this in our tax formula, then we would just include an adjustment to income on this line item. I would go to a separate tab for that, and I would call it alimony, would be 1,000. And then I'd go back on over, and there's the 1,000, bringing it down to the 99 for the adjusted gross income. It's just like we have here, 12,400 standard deduction. There's the 86.6 here, and then the 86.6. And then, of course, we would calculate the tax based on that amount. Now, let's go back to the Schedule 1, and let's say, well, what if I change the date to something that was happened after the cutoff? The software will typically help me out with that. If I say jumping over, and they tell me, like in the notes, like the client gave me in the notes or something, or told me verbally that they had a divorce agreement and they paid alimony. We asked then the critical question, well, when was the agreement? And they say it was after the cutoff date, after 2018. So let's say this was 2019. Then I'll put it into the system, and the system will help me out here. And if I go back on over, the system's not going to include it. And we're going to say, oh, well, that must be because it's after the cutoff date. And then we'll typically have the diagnostic up top. The diagnostic will often double check. That's going to be like the software saying, hey, it might give you something saying, like, basically, you included this in alimony, but it's after the cutoff date, and therefore it's not something deductible if it's an agreement after the cutoff date. That'll help you then to discuss it with the client and be able to inform a client, if you're working with a client there, to say, hey, it looks like that divorce agreement was made after the cutoff date, the rules changed, you no longer get a deduction for it, and the recipient doesn't get the income for it. And again, so that's going to be basically the functionality of it. So then, of course, it wouldn't be included over here, and you're back to the original point. So bottom line with a divorce, typically, once again, from a client, they're not going to have it included, the divorce, with a 1099 or something. Typically, they're going to have to tell you that they had alimony paid. You can also pick it up, of course, from the prior year tax return. If it's a new client, you want the prior year tax return. If they had alimony in the prior year deducted, most likely that means it happened before the cutoff date in terms of the agreement, and you can possibly go forward with it this year. Again, if it's a new divorce kind of arrangement, or if they ask you about a divorce arrangement or something like that, then you're going to say, well, after the cutoff time period, it has a different impact. The divorce agreement and the alimony could have a different impact, and you can then think about the cutoff date as to know whether or not the amount paid will be includable. And if it's in the notes, like if your client gives you notes and says, yeah, there was a divorce like this year or something like that, then you can enter that into the software, and the software will probably come out with nothing here. It'll say, hey, we're not going to include it because it's after the cutoff, and that'll typically give you a diagnostic, and you can figure out why it's not included, and then address that with the client, or have an understanding of why that would be the case.